Greetings traders, this is Houston Trung from thetradingedge.org, and here is your weekly market outlook for September the 14th to the 18th, 2020. So this past week was a shortened holiday trading week, but the markets did not disappoint. It was quite volatile in spots, and even though we had our levels mapped out pretty well, we were looking for some key levels across the indices to give us some clues on where the direction was going to go. Even though we had those clear levels mapped out, the markets didn't make it easy. So whoever says right now that that trading is easy is either A, lying, or B, ignorant. So we'll talk more about that. But right now, as it stands, we're kind of potentially at an inflection point. The sellers at this point here have a bit of the upper hand, but we have a lot of cross currents. You'd expect these things to move a little bit more cleanly, but right now we do have looks like anyways a pretty contentious battle between the buyers and sellers. Those dip buyers keep stepping up, and it looks like they obviously they're not going to go away without a fight. So this week, as I said already, will be very important for the sellers. If they want this correction to continue, they really have to continue their aggressive pressure to the downside. Otherwise, you risk, depends on what side you're talking about, but otherwise you risk having this correction fail, and we have the dip buyers step up and win once again and take things back to all-time highs. So we'll talk about those levels to watch this coming week. Talk about the week that was, the clear, I'll talk about the understanding the trend and how we had very, very clear levels in terms of where things were going to go, and that still wasn't easy. So yeah, at a certain point you have to have an understanding of price action, and then you need to have the conviction to stay the course even through the noise. So it's very easy to get distracted, to get sidetracked when you have volatility, but this is why it's so important to keep that perspective. Once you have those higher timeframes aligned, and I'll give you an example of what I mean by that in a few moments. Once you have those higher timeframes aligned and the trade is working, you don't want to cut yourself, you don't want to second guess your analysis in the heat of the moment. So let's talk about the econ calendar, the earnings calendar, and then we'll jump to the charts. So this coming week, econ calendar fairly busy. We do have on Tuesday the beginning of the FOMC meeting. So on Wednesday we'll have the announcement, and at 2 o'clock, and of course the press conference begins at 2:30. That will be market moving, definitely something you need to watch out for. Wednesday also in the morning you have retail sales number. That'll be interesting because retailers, some of them have been flying, so this will be interesting to see if you're getting the positive data point out of there. Jobs claims number on Thursday morning, 8:30, continues to be a volatile area. It's always risky. This is what I've been watching out for. Is you definitely want to watch out for any longs going into Thursday, because that jobs claims number continues to be that one spot each and every week where there is potentially volatility, and Thursday tends to be one of those shake-up days. We have typically a smooth trend going into Thursday, and then Thursday sometimes you can get shaken up because of that jobs claims number that happens in the pre-market. Again, if you're just trading options, or maybe you don't want to trade stock in the pre-market, hard to get out of positions if things are gapping up against you during the pre-market, and then you really have to kind of react once the market opens on Thursday. And in terms of the earnings calendar, slower earnings week. A lot of the big names have already reported. It's just maybe one or two notable names this coming week. On Tuesday, we got FedEx. FedEx has been on fire. We'll show that chart later on. Adobe, that's not a big name, but just curious to watch that one. And pretty much that's it for the week. The rest of the names are not high flyers, and again, nothing too much going on there. Next week will be more interesting, but this coming week a little more quiet. So that's it for the econ calendar. That's it for the earnings calendar. Let's jump into the charts. So as we always do, let's go into the VIX, because the VIX has been quite the interesting chart, as I've been kind of noting in my chat room that I host. The VIX, if you compare that to the SPY and the rest of the indices, the Qs, the Russell, the Dow, the VIX, funny enough, has been actually the cleanest of all the charts. And the funny thing is that with the VIX for the past couple of weeks, there are times, actually last 3 weeks, there are times where the VIX actually will trade in correlation with the broader indices. This is something that's unusual, but this is what makes trading sometimes difficult, is that sometimes you have correlations that you're used to relying on, and sometimes they break. Now, why they break is, you can Google the reasons on why the VIX tends to sometimes correlate with the SPY. But at the end of the day, what's important is, whether you use one as a proxy for another, or you do a pairs trading and you have a correlation of things that you're watching. As you know, oftentimes correlations can break, and this is when people can get in trouble. At the same time, this is why it's so important to simply trade the chart that's in front of you. The correlations are important and they're nice to have and to see, but you don't want to allow these scenarios when the correlations break for it to damage your trading account, or damage your methodology. So what's key there is that when the correlations break down, if they do break down, is to remain focused on the market that you're trading. Ultimately, that's the market you're risking, that you're trading, and you're risking capital in. So those are the charts that you have to be watching. So at some point, the correlations may revert back to what they were normally, so to speak. But again, oftentimes the markets can go a lot further than you think, and you cannot wait for the rationality of markets to kick in if your stops are telling you to get out, right? So that's the reality of trading sometimes, is that number one, it's capital preservation, and you need to live to fight another day and not be so steadfast in trying to keep a belief about how things should work. Now you're imposing beliefs onto the market, and that's not something that is usually a game that you can win. So that's the preface. That's the big thought there. Let's get to the charts. So VIX, what do we know? As we've been saying in the VIX, we nailed this VIX. We nailed this VIX trade because we got the analysis right last week. As we know, it was a outside bar, inside bar, and down on the quarterly chart. All right. So that's 2 weeks ago now. We had a pop back up, and it retested this exact orange line. That orange line, or sorry, it's a red line there. I'll just maximize it so you can see it better. That red line, it bounced back up into it. That is the breakout area. Okay, that is the prior quarter's low. So on the monthly chart, it looks like so, right? So this popped back up, retested that area, and came back down again. So right now it's outside, inside, and down on the quarterly. It's a down up on the month. So we did go up on the month for the month of September, but look at that, we're coming back through the range again. Prior to that, we were going Momo down, and the weekly chart, boom, right there, we had been going Momo up for 2 weeks, right? Momo up, and this week here, we actually got a break to the downside. So a Momo up reversal to the downside that happened on Friday. But we got in the short well ahead of that because we saw what was going on the lower time frames. Specifically, we use the higher time frames to understand what the bigger price action. The bigger price action being that we have that outside, inside, and down on the quarterly. That is still the strongest of the trends that we're looking at. So even though it's we had a big pop up around the VIX, it was up 13% at some point on last week or 2 weeks ago, not this week, but the week prior, and then up there was up another 4%, so it was up close to 20%. It was even higher than that if you actually look at the high water mark here. But we realized last week that it hit that blue level, that is the quarterly open, and the sellers came in aggressively, so they sold that level down. What made things tricky though was that the VIX this past week was going down as we had portended, but at the same time the SPY was going down. So that's what we made it a little tricky, because it makes you second guess the analysis. Is like, well, how is it that the SPY is also going down at the same time as the VIX? And the reason, well, it doesn't really matter. Right? So we can find reasons after the fact. The reality is that the trade was there. You gotta take the trade. You can't wait for a rationality to appear before you take the trade. The trade was there. We took it based on our levels, and it was a good trade. So here you go. What we knew going into the week was this: we had this situation here. It hit that right there. That's the quarterly open. That blue line. Okay. And then that red line is the outside, outside, inside, down. So that's the quarterly level on the quarterly chart. And right there was doing the Bollinger Band walk, right? This, if you recall, last week's video, I said this formation here looks just like this formation there, right? This is a test of the Bollinger Band, the upper Bollinger Band. It fails. They can't keep it going. Comes back in again. All you need to wait for now is a break below the prior bar that pierced the Bollinger Band or couldn't stay above the Bollinger Band, and that's a reversal. They're probably going to come out the other side again. That's what happened. All right, so here, look just like this. All right, so we hit the quarterly open. It could not stay above the Bollinger Band, and as soon as the Monday broke below there, it was gone. You don't have to wait for this. You know, if you see the opportunity to get short here on Monday, which is what I did, to take out that low, you want to get involved in that trade. And so now the question was, how far does it go? Well, easily what we know is that the first pivot to go after to cause the reversal on the weekly chart is the prior week's low right there. So that purple line we drew last week was the prior week's low, 25.68. That triggers the Momo up reversal. And they did it on Friday. Boom, right there. Inside bar and down. So going into Thursday, this is funny, right? Because going into Thursday, if you look at that chart, where do you think it's going to go? Well, people are like, okay, well, it's an inside bar. It could break either way. That is true. Inside bars can break either way. But with our bias, our understanding of the higher time frames and what preceded it, right? What preceded it was this action here. We understand now it's actually coming back to the range, right? This is coming back to the range and likely to take out the other side, just like what happened here, right? This is why it's important to have understanding of context versus just taking bars or trades with only, you know, one bar of perspective. Understanding this lead up is what causes this ultimately to break to the downside here, right? Come back down. Same thing here. We understand this lead up causes this pullback because of the of this aggressive nature of this, and if the, you know, given the VIX, what we know about the VIX is that unless another shoe drops, volatility would tend to collapse. So it goes inside bar down, and then during the day here, it's basically, look, if you're intraday trading, you're looking for any way to get involved once it breaks below that low to get into it and go and to ride it down, and it does that break below the prior week's low, 25.68, and it closes at 25.52. So expectation now is that we take out this here. We take out this outside bar's low right there. That's August's low, 23.64. So let's redraw our ranges here. This thing has to keep going now. Ultimately now, you do not want to see this coming week, you do not want to see this high get taken out, this week's high. So long as the quarterly open remains, that's still your bias to the downside. But you're looking for this low to get taken out. So that was the expectation, right? The expectation is that we now take out that low. We did that already, and now we take out that low. So when I say expectation, it means this is the market's expectation. Okay, so this is, you know, a consensus of the market view. So when I see these levels, I'm not thinking from a Houston perspective, like, oh, I would like to see the markets go here. No, like this is the, when I say the expectation is, this is the least resistance in terms of where the market's going to go, right? It's going to go there. That's the least amount of resistance. So if the market fails to do that, that's when you need to adjust and be aware that's happened. So that's the difference between, you know, personal expectations, and this is the market's expectations. So the market expects it to go there. Just like this past week, the market expects it to take out that low. Once you come back to the range, you cannot pierce above there. Expectations, it takes out that. That's what the majority of participants are looking at. And if it doesn't happen, then you need to shift. But you don't want to, you know, shift. You don't want to shift your perspective until the price tells you to do so. And at no point during the week will be threatening to take out that high there. So that's the understanding of expectation, market expectation, not your expectation, but, you know, the understanding of the path of least resistance. So there you go on the weekly chart. Now that's your Momo up reversal, expecting that low to get taken out there now. And on the daily chart, we got the inside bar down. Here's so on Monday, if you break above this high here, Friday's high, that's an inside bar reversal. A little bit that will be definitely, if that happens on Monday, it's tricky, right? Because you're still gonna have the quarterly open here, and it's gonna be above the monthly open at this point. So then you're gonna have a disconnect, or I call it a divergence in time frames. So you'd have the monthly and the weekly charts looking green, and the quarterly chart looking red. So that's when you can get super choppy, right? So this is the area now where you kind of have to watch out, because things will get very, very choppy once you have that mixed time frames. Ideally, you keep breaking that downwards and play out that market expectation. That is to take out that low there, because right now as it stands, it's full time from alignment with the downside. You're below the quarterly, you're below the weekly open, you're below the monthly open. All the charts are red on the VIX chart. So the path of least resistance once again is to the downside, right? So if it pops up here and creates an inside bar reversal, you expect at some point things to get very choppy, and that's what you want to watch out for. So on the, if you do intraday trade, here's a very nice trade going into Friday. We already had the levels, right? We already knew the wider the bigger picture, and the path of least resistance was downward. Now we had a good short on Friday here. So once you understand what to look for, this is what it this is how it played out. On the 10-minute chart, outside bar, Momo, this is Momo up. It hits that level there. What's the level? The monthly open, and this is where it gets extinguished. Outside bar down. So once you get once you have this break back below there, that's a short. Momo up reverse, Momo up reversal short to the downside, and it fades into the afternoon. All right, so that's a trade that I took intraday on Friday, taking out that low there, and then coming back into the range again, taking out everyone who got long in this sequence. So that ripped them all out, boom, right away, and then we finally took out that 25.68 in this area here. All right, so nice move on VIX, clean trading on VIX. Because we understood the big picture. Again, the big picture being that we had tried the Bollinger Band walk and it failed. Now SPY, this is the trickier one. SPY and the rest of the indices were trickier because you're kind of in no man's land right now, in the sense that for the most of the week, except for Thursday and Friday, you were kind of trading with mixed time frames. So bigger picture first. SPY, even with the selling so far, we're down minus 4%, so not a huge pullback by any means. We're still up 5 consecutive months in a row. After the inside bar here, inside bar up, 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 and we had another higher high there. All right, so we've had nothing but higher highs for the past 5 months. That has not been negated yet. We take out August's lows, then you got to watch out. If this month here takes out this low from August, that will turn this bar an outside month. So September, if the sales really step up, it could turn into an outside month. Okay, so that's what you got to watch out for, is a potential outside month action in SPY. So with the SPY, we had said we need to watch the prior week's low to see if we get the Momo down condition, and now we got it. It went Momo down. And the issue was that the markets, this is something you need to watch out for, is it would open lower and then popped up. And that makes it tricky, because then when you open lower and you pop up, then you're gonna have a mixed time frame, right? So there's that purple level, that's our prior week's low. So it is now Momo down now, we're watching for that. But before I change the levels, I wanna show you the daily chart. Again, this is the price action analysis, and then once I finish this up on the SPY, we'll speed through the rest of the indices because they're all pretty much correlated. So here, on Monday, you gap down, okay? It means you opened lower, but then you pop up, okay? So they were able to, they opened up here, so that is lower, right? Because the gap down, it closed lower, but then it popped up. So now you're trading above the weekly open. So here's the issue: you got the weekly open here, you got the monthly open up here, you got the quarterly open down there. All right. So now the only thing red is the month, but then you have green weeks here and a green quarter. So you get this mixed time frame, and this stuff here was super choppy, right? So this stuff here in intraday on the SPY is difficult to look at, because it's very tight ranging stuff, because you have basically different forces with different opinions fighting each other. So there's not a clear move at this point until you can start breaking below that quarterly that weekly open. Then once that happened on Thursday, they really gave it up, right? Then it became more clear. But even Friday was a little tight and choppy, because now you got that 50-day. That 50-day EMEA, it's held. Okay, we had a 50-day test back here, June timeframe. We touched that 50-day. Prior to that, we had a closer touch in June, and then prior to that was in May. So that 50 days held, right? So we did have closed below here on this move. Look at this. This could be very similar again. This is how it looks like it's playing out. You have a Momo down in May, and people have thought maybe this is the start of something bigger, right? Maybe it's going to come back through here again and go back to March's lows. But what happened? Boom. That bar happens, right? That's a green bar. Basically, it looks like it's kind of like a gap reversal. It opened lower, and it kind of pops up. And then that bar there is a Momo down reversal buy signal right there. And then once you take out that high, you expect that high to get taken out. And that's what happened the next day. Okay, so that could happen again, where right now you got a Momo down, right? On Monday, you open up. If it opens to lower, It's happening right on the 50, right? So it's happening right on that 50-day moving average. So these buyers, so even though you're closing below the 50, people say, oh, you closed below the 50. That could be it for, that could be it for the trend. That's not necessarily true, because what we know about the Momo down conditions is that they can reverse very, very quickly, because when you have Momo down scenarios, that means you tend to get oversold very, very quickly, because people are just basically, chasing. It's momentum. So it doesn't take much to basically stop them out, because these are late longs, that are late shorts, that are chasing. And if you can get that kind of scenario, you have a Momo down reversal, boom, he's going to tick out the other side again, and that takes it right back above the weekly open. You can see here it was green quarter back then too, right? Just like this is Q2. So here we're still green quarter, right? So it's still green quarter here. Way down here, it's gonna be hard to change that. So we get some sort of scenario like that again. We get a Momo down reversal, back up. We take out that high. The issue here is that, unlike we had back then, is that the monthly opens right there. That orange line. How do you clear that monthly open? That is going to be the trick for the indices, all of them. How do you not have a red month? Because you get stuck in here, it's going to be chop city. So that's what you need to watch out for the SPY, is that kind of scenario there. But right now, we do got the Momo down, and we want to watch and see how that plays out. Because if it just keeps going, and they don't reverse it, it's got to keep following the momentum downwards. Right now, the range is like that. So let me just adjust the ranges here. Okay, so we shall see. There, Momo down this coming week. Which side of price does the next bar transact? Does it break below the low and keep going? That's Momo down continuation. But if somehow the buyers step up and take out that pivot high there, this past week's high, that's a potential. That is a Momo down reversal. The issue there is you still have that monthly open right there. That could act as level resistance. You need to watch for that and see how that plays around that level there. So this is again the level to watch to see how far the Momo down takes us. So far, it's a pullback right into the 8-period moving average on that weekly chart. So there's your SPY chart. Okay, now let's go a little bit faster. Qs has been getting beaten up by, just like the Russell, and we're getting very close to putting in that outside bar for the Qs. So still 6 consecutive months up. 1, 2, 3, 4, 5, 6 up months in a row. Okay, so that's not bad. But now we have a pullback. Same Momo down condition. All right, so watching those same things. So what I'm doing here is I'm simply repeating the process across these different indices so that you get used to the thought process. So that when I'm not around, right? So obviously during the week, I'm not doing these videos. That you can sort of hear my voice in the back of your head, explain what I the line of thinking that I'd be using to understand the price action. So you got the Momo down here. All right, so Friday was the week's low. Does it keep going, or on Monday do we pop up and then create a Momo down reversal to the upside here? Again, monthly open right there, tricky part there. So just like the SPY, a little tricky there. And on the 2-day chart, you got that big outside bar. So what's the next bar? It's always the important thing to ask is what's the next bar after a big outside bar like that? It could go down, right? But then it has to keep going down. Otherwise, it's a Momo down reversal potential scenario. And then it looks something like these. You see, we had a bunch of outside bars that people thought were scary looking, right? That's an outside bar. That's an outside bar. Anything with, red diamonds are outside bars, right? Outside bar, they all look kind of like ominous. To get the next bar, green, doesn't have to be green even, but because that's not green, but it's a down move. But then they have a reversal, and it ends, and automatically it's a buying opportunity because we're still in an uptrend. Okay, so there it is on the Qs, same thing. That 50-day moving average coming into play right now. Let's see how that thing. Let's see if that thing holds. This is the first touch on the 50-day for the Qs since way back here. This is actually the first touch since we broke above it. Where is the 50 here? Yeah, here we go. Since April, right? So we broke above, quick touch, and then was been gone. So that's how crazy of a run it's been since April. Now let's talk about Dow. There's a lot of good-looking Dow stocks, and there are some obviously that are not so good-looking, but there's a lot of them that have the whole potential. That's why I'm still of the opinion that the Dow hits all-time highs before maybe we see a bigger pullback. Now, guess what? The Dow, sorry for those Dow fans out there, but it's a bit of a meaningless index to be honest. It's a little bit dated. The fact is, they have a market cap weighting. It's not, sorry, not a market cap weighting, but it's a weighting based upon the stock price. So the highest priced stocks are the highest weighted in the Dow, right? So that is not, it doesn't make a lot of sense nowadays, given that Apple which was one of the bigger high flying stocks in the Dow, has split itself, right? So it was trading a lot higher. Now it's split and now it's less weighted, right? Even though it's the largest company in the world, it's now less weighted in the Dow because now it's a smaller stock. Now, had Apple stayed the same size, right, that did not split, you could argue that would have made it easier for the Dow to hit all-time highs. But Apple did split, so now that took out some of the wind out of Dow sales. So it's one of the quirks of the Dow. So, anyways, that's what it is. And now all-time highs are a little further away. This past week, we're now 6.78%. We were very close before. We were less than 2% earlier. At one point, we were less than. Let's see, how are we? How close did we get? Yeah, less. We were only like 1.2% away, but now we're at a good 6.70% away. So inside bar up and up on the monthly chart, and on the down, we've got the same Momo down condition like we have on all the indices. This Momo down condition is important to understand, and I'm not going to spend too much more time belaboring it, but there are dozens of stocks that have the exact same pattern. So once you have an understanding of that price action pattern, then you'll be able to respond more appropriately to the different ways that it can price action can unfold afterwards, right? So that's the understanding of prices. You need to understand how these things unfold, the potential different scenarios that it can unfold, so that you have so that you can have a better understanding of what's going to happen, what could happen, and how you're going to respond. More importantly, so outside bar down, that's Momo down on the Dow. Now watching to see how far it goes. See this on the 2-day chart? Gives us a nice double outside bar. We like that a lot, right? Double outside bar. It means volatility is in play, and sure enough, it went down. So that's Momo down here on the Dow 2-day chart. How far does that thing go? Watch for that. And inside bar Friday, even all that volatility, it wasn't actually that volatile. It was choppy. It was very, very choppy. Cyclical markets. You could say you were trading in a range. Actually, it was actually quite choppy. And you spent, sometime trading below the weekly open, sometime trading below the weekly open, and then again back down below the weekly open. So definitely choppy markets there in a range. That's basically a consolidation pattern there on the Dow. So inside bar now on Friday, how does that break? And if you break to the downside, that will trigger a continuation of the Momo down on the weekly chart. So looking for that as a definite possibility for the Dow. Continuation move to the downside. Okay. Now let's go Russell. We'll speed up a little more. Russell, here we go. We need to watch a Russell here. Potential inside bar reversal short to the downside. This is significant. You break below that low there. Okay, August lows. That's an inside bar reversal short. Okay, and that's a major time frame, the monthly time frame. That happens. Yeah, you definitely put in that quarterly open and play, and then potentially rolling back down through this range again. So that's something you definitely need to watch out for. It's the potential inside reversal short on the Russell. Momo down on the Russell like the other ones. Let's see how far that Momo down condition takes it. And on the daily chart, it's also Momo down. All right, so that's Momo down. That's what we're looking for on Monday. Do we get a continuation of that Momo down move? Because it's been fighting that 50-day, and right now the sellers are definitely winning that battle because it's Momo down. How far can it go? There's a 200-day right there. There's your quarterly open in play. But that orange level right there, see the orange level? That's the inside bar reversal short level on the monthly chart. You break below that orange line there, that triggers this monthly signal right there. Okay, and the monthly guys will step up. You'll have a new fresh group of sellers who are going to get out based upon a break of this bar's low. All right, so that's something very, very tangible to watch for with the Russell. TSX, ends a week green, but it's did have a reversal in the month earlier, so it did have a monthly reversal. It's still a green quarter. TSX is very tight stuff though, right? This is not surprising me at all. Anytime you have this type of grindy stuff like that, it doesn't take much for a reversal to wipe out all the gains. That's what happened so far, but still very, very tight rangey stuff there. And TSX, what can we say about that one? Yeah, just watching to see how far this thing goes now that we have on the TSX, what do we have right here? An inside day. inside bar, excuse me, on the 2-day chart. How does that one break? Okay, but you're trading with mixed time frames. Below the monthly open, above the weekly open, above the quarterly open. So definitely mixed time frames with the TSX. Emerging markets now. Okay, so 1, 2, 3, 4 months of higher highs after the inside bar break, and now we have an inside month so far. Okay, do we get a break below the prior month's low? Yes or no? Watching for that. Okay, and here on Monday, watching this right here, outside inside. How's that one break? If it goes outside inside and down on emerging markets, right? So there's your weekly open, weekly chart. Excuse me. You're gonna have a continuation of this down move, and that's what you want to know because all the indices have been very, very correlated. So it's very, very rare to have emerging markets going up and the other one's going down, or vice versa, emerging markets going down and the rest of the indices going up. So this type of tangible signal, if it goes inside bar, outside bar, and down, when you look at that in the morning on Monday and you have a gap down, you know that this it's going to be very correlated traditionally anyway. So we talked about correlations at the beginning, but that correlation is held. So all the indices have pretty much been trading in the same way, with the exception of the VIX, right? But the rest of the indices are trading in tandem. So we get that outside bar, inside bar, and down on Monday. You want to know that. That means that's kind of that's definitely foretelling potential selling in North America. Likewise, you get outside, inside, and up on Monday, right? That's potentially again that's foretelling you that they're gonna have buyers step up in North America. So there's the EM. TLT, what's the bonds doing? Did they rush the bonds for safety? In fact, they did this past week. Very, very tight week though. I can't say it's a big rush to bonds, but they did have a green week. Month so far looks like it's gonna end. We still got a lot of month left. We still got 18 days, but right now it's outside, inside on the monthly chart. Tight stuff. This past week, green week. But they stemmed the selling. So we had an outside bar there that went up, and it looked like there's potential for it to go outside bar up and back down again to create the Momo up reversal. But the buyers defended, creating an inside week. So far it's defending that. But now we have a clear level right there. How do you break this inside week range? This is setting up very, very nicely. Because we have a lot of charts that are telling us the same kind of things. So when you have these kind of correlations, it makes trading a bit easier because they're all trading in tandem. Okay, so TLT for the moment, Momo up on the daily chart. How far does it take it? And more importantly, that inside week, how do you break that? Very tight there. Let's go gold now. Gold doing not a lot. So gold hanging in there, still holding its Momo condition. Momo up, and inside month so far. So not doing a lot this month, still inside month, all right? Very tight stuff. Look how tight that is. It's all inside month, right? So this week, the range is actually getting tighter. So you're going to see how do you break out of that. I don't think you get out of that, to be honest. I mean, you may not get out of the month of August. We had a pretty decent sized range there. And right now you're squarely in the middle. It could simply be a chop festival for MGC for the next 18 sessions. Or 18 days, excuse me. And yeah, for now on MGC, what can you say? 2-day chart, got an inside bar developing, not closed yet. So wait and see how that one breaks. Right now, very tight stuff. MGC, nothing really much going on there. Although the bias is to the upside, but because it's so choppy, you can just see chop is you have bars that are overlapping. I call that chop, right? This by any definition, when you have overlapping bars, that means it's basically no longer trending anymore. And this is actually a consolidation pattern. So if you were looked at some time frame, it would look like an inside bar, right? So there's your, it doesn't show you an inside bar on the weekly chart, but it shows the inside bar on the monthly. So in some time frame, you're going to see that price action consolidation as an inside condition, right? So the different time frames that I'm using are basically artificial constructs, right? Like it's just time is a constraint that we impose upon the markets so that we can better see the price action patterns. So this, once you get used to it, you can just see that that's inside action, right? So yes, you could try to find some time frame to make it turn into an inside bar like that, to have a nice little blue diamond, but that's not important because that's basically just a constraint or a filter you're applying onto markets. The reality is that if you see it for what it is consolidation inside bar type of action. Inside bar, if you could find the right time frame, it would show that as an inside bar like that. Okay, so there's your gold. Nothing much going on there. How do you break inside that consolidation? We'll have heads up on that before it happens, though. BTC holding its ground, very, very correlated right now. That's what I'm saying. The correlations are very, very high with all these products. It makes it kind of a little bit iffy because sometimes, well, you know, the thought was that cryptos were meant to diversify your risk by not trading with high correlations with the rest of the markets. But with BTC right now, it's trading very closely to gold, and gold and Bitcoin are not that much different in terms of their charts and their price action patterns with equities. So where is the diversification of assets when they're all traded in correlated manners? So here's BTC right now. Personally, I'm long BTC. So what can you say about the BTC chart? It's inside year. If you want a big picture, I've been saying this for a while now. Inside year, all right? I'm not sure you break out of that this year. You just go choppy, because I think they're trying to play a breakout is unlikely. Just given how strong the selling's come in every single time. Although, you know, again, we're there to see if it breaks or not. I'm not gonna predict that it's not gonna happen. But I'll be prepared if it does. So for now though, 12-month chart is inside month. That's our inside bar. Quarterly chart, it went outside, inside, and up. You nearly took out that level there, right? 13174. Could not do it. It was 12,490. Now this is now a reversal to the downside on the monthly chart, but the issue is that you get the quarterly open right there. So not clear selling yet because you still got that quarterly chart. This one here, it looks okay. You know, it's basically a retest of the breakout area, right? The breakout area was 10,398. So we're kind of trading close to there right now. The weekly chart, it was Momo down, but the buyers bought it back. Now we're trading at 10,474, so right above that 10,398 level that we had talked about just a few moments ago. So now it was Momo down, right? Does it continue to go Momo down, or do we get a Momo down reversal on the weekly chart here? Full transparency, I am long BTC now on this setup here. I am long on this move right there. Outside bar, inside bar, and up. This has now taken out that pivot already, so I will get out of this trade if it comes back into the range again. Come back through. I do not want to see come back in through here to take out that low. I'm out. I do not want to see price break back below the weekly open there, be a red month, because then that could retrace back to the downside again. So there's I am long BTC. I'm not super enthused by it, but you know, the bet is that that was the low of the week, and potentially that we might get a move back towards the monthly open right there. The 2-day chart is very, very similar, so I'll use a daily chart for my entry, but the 2-day chart is very similar. It's a Momo down reversal, so anytime you're Momo down, it means it gets oversold fast because people are chasing. So they chase to the downside, create an oversold condition, and now you're looking for folks to get stopped out, especially the ones who are late to be short. So that high there got taken out, creating the Momo up reversal, so Momo down reversal to the long side, and how far does it go now? You got that monthly open right there. All right, so that's it for the our regular assets that we covered today, or in our usual videos. Let's do a few stocks now that I'll be watching for the coming week, some interesting names, and then we'll do our stars and dogs. So here's a few stocks that I had mentioned in last week's video as being interesting ones. Just want to follow up on them because the lessons are very, very tangible. The lessons are very salient. So here you go. Double outside. Anytime you have a double outside, you want to see what happens because the potential is there for something like that to happen. Because the volatility, you know, when you have double outsides, it means you need to pay attention because the volatility is increasing. So there's the potential for it to go really gangbusters. That's what happened here on broke right on Monday. So it went outside and down, right? So it hits the 50-day weekly moving average here on GIS right there. Outside bar and down, discontinuation on Monday. Boom, there goes GIS. Big selling day on Monday for GIS. Again, GIS is a very, very typically a very slow moving name, right? So when you have a minus 5.75% day, that's pretty severe with GIS, and still it's Momo down. Still Momo down, continuation move, right? Broke below the 200-day. Ouch, GIS. What's going on there? Okay, WKHS. I mentioned that one as a potential mover to the upside. Why? Because we had still Momo up condition. This thing was still going. So even though we had that selling last week, the buyers have shrugged it off. It was Momo up. This is what it looked like last week. So it's Momo up right now. So until you get a break below that low, it's one of those prove it to me kind of things. right now they're moving to the upside, and that's what happened this past week. WKHS had some very nice moves going into the week. Look, Momo up, and we extinguished Momo right there on Friday. So now we're getting pretty elevated. Not saying jump into WKHS here. It's a little elevated because you're in the Bollinger Bands. Will not take much now for bring the break below there, and then that extinguishes the Momo move. But it was a good one to watch. Wix we talked about last week as well. Here's another one to watch. It did not move this week, so it's still on the watch list. Look at this one here. Now it's double outside bar and one inside week, right? So now you want to see how does this guy break outside of this of this past week's range, because that's a very, very clear. I'm gonna make that purple because that's our weekly levels. That's a very, very clear level on what side of action you want to be on there. Okay, and there's a potential for more range expansion now with Wix. The good thing with Wix, you'd actually rather see it break to the downside. Why? Because you break the downside, you already created a monthly reversal. So this would be full time frame alignment of the downside if this thing breaks to the downside on Monday. Not only that, but it's already kind of begun here. Look, the issue here is that you had green week because you opened lower, you popped up. This is what I talked about earlier, right? Opening lower, you pop up again. It goes inside bar, up, inside bar, reversal short right there. So you can be short right now already in Wix. The only issue here is that you had that weekly open right there. You're not expecting it to break down really, really quickly. So, but going into Monday, you also have this 2-day pattern. It's still Momo down. Momo down, inside bar. Now, this inside bar, it breaks down below there. That triggers the weekly. So Wix is looking very, very interesting on Monday. Shop. This one here, a little tricky here because this is also setting up for something. It's just like Wix. Okay, so there you go. Double outside bar, something setting it up, but you got the inside week. All right, prefer it to break to the downside because you got that full time from alignment, and you got the Momo down right now. So that's a little tricky because you got Momo down. The buyers could step up here and then wipe out that Momo condition. But again, something to watch for there. Also, 2-day chart is also a outside bar. CMI, usually a sleepier name, but these things have been moving. Double outside, how's that get resolved? I'm watching that condition there. CMI part of the Dow. Xylo, outside inside, how does that guy break? Watching for that one, that'll be a good one. It's going into highs, so that'll be interesting. Monthly chart here, right? A bit of a doji right now, but still going right into highs. I'm gonna fix this. These are some pretty historical lines here. I'm gonna put that there. Okay. And what else we got? Retail, XRT, ETF, outside inside. Okay, if you break below there, we gotta watch out because here, look, I don't know if you see us or not. Yeah, let me do this. On the monthly chart for XRT, you started the Bollinger Band walk in August. But if you can somehow break below here, think of that low, that's a a reversal. This takes a lot though. This would be actually an outside month. It's a little tricky. It's trying to do a Bollinger Band. It's hitting the resistance. It's hitting the the Bollinger Band lines here, upper end. Your red month firmly. Now at this point here, if you go outside bar, inside bar, and down, right? That's potentially back down to the range again, right back through this because this is Momo up. Remember that we had that huge move on retail, the upside, that extinguished it, and boom, outside inside, come back through the range again potentially. A Yeti. Okay, Yeti, outside inside, and the monthly chart already did this, took out one side of that range, right? So it's already a red month. So now Yeti, this move here would be continuation of that move to the downside. 2-day chart, potential inside bar reversal setting up on Yeti to take it lower. So we see more and more short opportunities here, but again, this could be very, very fluid and change quickly if the buyers step up and fix the charts. 2 more names, and then we'll talk about stars and dogs. HubSpot, a little bit. The only issue with HubSpot is that it's got lower volume. I think less than 300K a day. It's a little trickier to get in these trades. Option trading is kind of nasty with Hubs because of the spread. But interesting one here, outside inside, right on Hubs, and you got a potential inside bar reversal short here to trigger the weekly signal. And one final one here. Let's go here. That's Turtle Beach. Same condition here, outside inside on the weekly chart, and then you have the same 2-day scenario, right? Inside bar reversal. If you break below there, that will break below. That's below the quarterly open, and Yeah, that will be, well, you still have a green quarter though, so it's a little tricky on that one. It may not go as far as you think it's going to go, but enough to maybe take it back to the quarterly open. So there's your here. Okay, the stock stars and dogs. Now we'll wrap things up. One of the high flyers this week was CODX. So, you know, for the, I guess the short holiday week, man, it was gangbusters, up 18% on Friday, come back to the range. So yeah, that's momentum move to the downside. You can just see the angle of descent. Then they basically right here they reversed it. Inside bar, up. So nice move on Codex. And the week, Uber flying on all cylinders, shooting on, basically moving on all, firing on all cylinders. And not quite at the recent all-time highs, but had a very, very good, basically 3-month run. Caesars. So this thing here, the casino, is doing pretty well. You're at multi-month highs, broke above June's highs. Going into highs, although hit that Bollinger Band here, so you need to be mindful of that. But the money has been going into Caesars, right? So it's been going into Caesars for a multi-week move now. Nike continues to follow the path upwards. Now that thing is at all-time highs, right? So a nice day on Friday, but again, you're going right in the Bollinger Bands. This is tricky. You don't want to be a buyer up here, right? You don't want to be a buyer up here because you buy up here, you really have to think it's going to go parabolic. Otherwise, you're going to suffer a big pullback like this. So got to watch out for that, but Nike showing its strength this past week. And one final name, I talked about it in the beginning of the video, FedEx reports earnings this coming week. I think it's Wednesday, right? Yeah, 14th is actually Tuesday. Sorry, did I say 14th? 15th, yeah, 15th is Tuesday. Momo up, going earnings. This is a little tricky. It's Momo up going into earnings, so you have earnings on that day. All it takes is for a break below there, and then FedEx is going to come back to the range. It's a little tricky there. But FedEx has been, obviously flying, and it's been doing very, very well. Okay, some of the dogs. Well, who didn't do well in earnings? Yes, Yoga Pants. Yoga Pants did not do well. Lulu missed on it, and he had a multi downward move here on Lulu. PayPal also getting weak this past week. For the past 2 weeks, we had some selling here now. So A, B, C move there. Oil names, man, still getting hammered. So right now, oil is not the place to be in terms of holding them long. APA, Apache, look at that. It's been a dog for multi-weeks now. Same thing with Oxy, and you can just keep going down the list. They all look terrible. Oxy's another one here, looking just like I might go back and take out March's lows. So Oxy looking really, really bad. Amazon, after this whole SoftBank fiasco, I would not be surprised if they go after all these FANG names and stick it to the SoftBank guys. And it looks like they started already at Amazon. None of them look good. Even Facebook. Remember, Facebook was on the list last week in terms of potential shorts. I got short a few times. Facebook this past week. Facebook too. Boom, multi-day move to the downside on Facebook. Momo down now. And one file name, AMD. AMD, another big tech name. Oops, I spelled that wrong. And wow, look at this. The line of descent on that. That's a little bit steep. That's the issue. It's a little bit steep by AMD for that thing to continue. That means when you have that kind of steep thing, you're gonna probably expect that to be some sort of a Momo move. And sure enough, on the weekly charts, Momo down. So let's see how far that Momo down move takes AMD. All right, so we'll draw those levels there. So that's a wrap for this week's video. I hope you enjoyed it. As always, if you have any questions, feel free to leave it on the blog at thetradingedge.org. or in the comments section in YouTube. If you really like the videos, give it a big thumbs up. This helps other folks find the videos. You're going to be notified when these videos drop. You got two choices. Either click on the big subscribe button on YouTube, or again, go to the blog, sign up for the newsletter, completely free. It comes out weekly on Sundays, and it's where I share some of my trading perspectives, as well as the links to this video when they come out. So once again, I really had fun doing this for you. If you like it, please feel free to share with your colleagues, your friends, anyone else who knows who trades. And as always, I wish you a good trading week. Trade well, or trade to trade well, trade safe. The markets are definitely in some ways picking up in terms of volatility. Well, volatility may not be the word because of obviously VIX is going back to the lows, or has been heading back down again. But certainly the swings on some things are very, very wide, so you need to be aware of that. So watch out for that. Trade safe, and once again, stay strong. See you again next weekend. All the best.